Welcome back, everyone, to another episode of Trade by Numbers. Hope you're having a fantastic Sunday. We're going to be talking about a lot of great things today. I've had a lot of people hit me up with questions about what is it that I call a position size. Why is it I say ROI instead of gains? And, we're going to be covering all that and a lot more. If you're a brand new investor, we're going to be talking about how you get started. And if you're already out there investing, we're going to talk about how to take it to the next level. So stick around. You're going to like what I got for you. If it brings you any value, hit the like button for me. Hit the subscribe and notification bell because you don't want to miss any of my upcoming videos. So let's get into it. First thing that we need to come to an agreement on is a universal truth, and that is that you cannot work yourself to financial freedom. I don't care if you're making $100,000, $200,000 a year. If you get hurt and can't go to work anymore, is your bills paid? Because if not, then you're broke, period. The only way to reach financial freedom is through investing. And I don't care what you invest in. It can be real estate, it can be businesses, it can be stocks, it can be crypto, it can be bonds, it can be all kinds of things, but you have to be investing. And I don't mean in some crummy 401k that gives you such little returns back across the board that I could put stocks up on a dartboard and throw at them blindfolded and beat. So let's talk about really investing. Now, if you're brand new, you don't even have any money in the bank. The next thing that we need to talk about is go to the Amazon bookstore, go to the local library. What I tell people is go to Audible. There's a link in the description below. Get you a subscription to Audible. You can learn while you're doing other things, and you've got a wealth of knowledge at your fingertips for just a few bucks a month. But however you do it, go get the book, The Richest Man in Babylon. That book is going to teach you how to start paying yourself first and start putting back money to invest. Anyone can cut something out of their life, whether it's making coffee at home instead of going to Starbucks or taking your lunch instead of eating out. You can figure out how to make a few dollars a month to put back, and it doesn't have to be a lot. If you can put back even a minimum wage person, I've helped dozens of people in my life that just had minimum wage jobs get started investing. And, even they can put back 30 to 50 bucks a week and start investing. Now, against traditional wisdom, I do want you to start dollar cost averaging in, okay? This means every week you go out and you put that $30, $40, $50, whatever it is you've got, and you put that into the market. Now, against traditional wisdom, most people is going to tell you to get something like the S&P 500. That way you're well diversified. I don't want you to be well diversified. If you're starting out and you've got very little, focus your efforts. Don't be well diversified. Get some really good companies that aren't going anywhere. They're still safe. That's going to outperform the S&P. Companies like, two of my favorite is Google and Apple. That's why I tell all my loved ones, Google and Apple outpace the S&P 500. And yet they're good, solid companies. Amazon could be added to that. But focus your money in. You don't want to be putting just $5 in a dozen different companies. Put some money in, get some positions built out. When you own a few $1,000s of each one of them, then you can start branching out and diversifying yourself a little bit. But when you're just getting started, you need to ramp that up as quickly as possible. And that's what focusing your efforts is going to do. Now, if you've got a little bit more time to spend on it and you're willing to put in the effort, I day trade. Okay? Day trading can really help you ramp up a portfolio if it's done right. Now, a lot of people, day traders, get a terrible rap, and mostly because, they say most people can't out trade the market over a long period of time. And when the markets are in a big uptrend, it is hard. But when markets are like they are now, they're volatile, they're falling all the time, it makes for the perfect conditions to day trade. And if you get someone that you can follow along with, That's what I'm on here making videos for, is so you can follow along. I don't charge anything. I'm not selling any courses. You can get on every day, every morning before the market opens. You can see what I'm buying. We talk about it in the afternoon, how we sold, how much profit we made, and you can really ramp up a portfolio, but it does require a little bit more effort. So if that's for you, then that's great. You know, crypto is another thing. Maybe you want exposure to crypto. No doubtedly, someone's told you that crypto is an extremely risky asset. I'm going to disagree. I believe that crypto, I'm more confident in crypto. That's where I'm putting most of my long-term portfolio money right now, is in crypto. Now, not all of crypto, but certain projects, you know, Bitcoin, Ethereum, Cardano. These are projects that I believe is going to well outpace the S&P over the next few years. They're not going anywhere. It's going to be the future. Whether we like it or not, you might as well make some money with it. So if you want crypto exposure, you know, make sure you're getting into crypto. You don't know where to go? Coinbase is a great platform for crypto trading. If you need a good stock trading platform, go to my link below and get Webull. Webull, not only is it going to give you some free stocks for signing up, but it's a great platform and you're really going to enjoy it. You'll learn a lot and you'll be able to trade. You'll be able to buy fractional shares of things like Google, Apple. You don't have to buy the whole thing. You can buy fractional shares on there. And that's why you can start trading with so little. That's why I talk about stocks and crypto every day on this channel. It's not that I don't love other investments. I love investing into businesses. I love investing into real estate. That is by far my favorite. But stocks and crypto give you the ability, if you got $5 in your pocket, you can go invest into the stock market. And no doubt, especially if you're just getting started or you haven't ever traded before, no doubt you've had friends, family, somebody tell you, stock market's a scam, don't get into it. And undoubtedly, they're telling you this for one or two reasons. Either they got into it, they FOMO'd in, they bought at the top, they sold at the bottom and lost a bunch of money. Or the wealthy don't want you to know how good the stock market is. They only want to tell you about the scary things in the stock market because they want to keep the money printing machine for themselves. Now, you know, you got to take it how you want it. But I know that that was my avenue to being able to quit my job and start working from home, trading stocks, trading crypto, and now I've been able to build out a portfolio and do more than I ever imagined was going to be possible for me. And that's what I want for each and every one of you. Position sizes. Now, I've had a lot of people ask me, what's a position size? I say position size so that no matter what your account is, I don't care if you're starting with $100 or $100,000. A position size is simply whatever your trading account's going to be, 1/10 of that. So $1,000, for instance, would be a $100 position size. This gives you the ability to not only trade 2 or 3 different stocks, but to constantly be able to average down if they continue to fall on you. That is why you want to break it up and you want to have these position sizes. Why do I talk about ROI instead of gain? Okay? I say ROI because it is scalable. If you're only putting a $100 position size down and you make 10%, you made $10. You may say, well, $10 isn't even worth my effort. But it will scale. When that $10 becomes $1,000, that would have been a $100 gain. When that $1,000 becomes $10,000, that would have been a $1,000 gain. So 10% ROI, that is the important number. What are you sending out into the world? How much money are you risking? And how much money are you getting back? That is what determines ROI. And that is why I always talk about ROI, because that way it doesn't matter what your position size is. The return on your investment is the return on your investment. And so that's why we always want to remember, how much am I making percentage-wise not how much did I make overall. Because especially when you're first starting out, it can be disheartening if your wins is just a few dollars. So that's what I got for you. Till next time, be blessed. Remember, never trade with your emotions. Always trade by the numbers.